Hello, I'm Bernard Hickey with the daily briefing from interest.co.nz. Today we look at the latest on the global credit crunch, which is driving financial markets and interest rates on both sides of the planet, and in particular the New Zealand dollar, which has jumped through 79 US cents on the turmoil this morning. Firstly, let's look at the credit crunch and at Citigroup, which has been the source of so many fears about this credit crunch in recent days. It is expected to announce tonight its largest loss in its history, along with 24,000 job losses, as it clears the decks of subprime bonds linked to defaults on US mortgages. That's 7% of its workforce, and shows just how serious the situation has become as it looks to conserve cash and bolster its balance sheet. Meanwhile, Citigroup's hopes of finding up to $2 billion from China's development bank have been dashed. It is now expected to ask its Saudi shareholder, Prince Al Walid bin Talal, to provide more than $10 to $15 billion of cash it needs to increase its reserves. The Wall Street Journal reports that Chinese authorities are worried about more political backlash linked to its sovereign funds investing in US financial institutions. Meanwhile, the fallout from the credit crunch continues to dominate financial market activity. The size of the write-offs and the problems faced by several large banks are now expected to force the Federal Reserve to cut official rates by 50 basis points to 3.75% when its rate-setting committee meets on January 29 and 30. Some are even wondering if the Fed will act earlier than its regular meeting and increase the rate to an unprecedented 75 basis point cut. This has driven stock markets higher and shunted the gold price to a record $910 an ounce. This is partly linked to a slump in the US dollar to near record lows, as the prospect of lower interest rates makes that currency less attractive. Of course, the other side of the coin is this makes the New Zealand dollar even more attractive, particularly for those people doing the carry trade. This morning, the New Zealand dollar jumped through 79 US cents and is now just below its record high of just over 80 cents. It's also affecting interest rates both on wholesale markets and for retail investors. Yesterday afternoon, BNZ increased its mortgage rates, following ANZ, National and Westpac, who are hiking rates because of the credit market turmoil.